Well, welcome back. Now we look at where markets ended the first full week of trading for the new year. The Dow Industrials above 49,000 for the first time ever. The December jobs report showing weaker than expected job growth for the month of December. But the unemployment rate beat expectations, remaining at 4.4%. This as Wall Street awaits fourth quarter earnings, which will kick off in the week ahead with the major banks reporting their fourth quarter. Joining me now, getting ahead of it, is Niles Investment Management founder, Dan Niles. Dan, great to see you. Happy New Year to you. Thank you so much for being here.
Always my pleasure, and Happy New Year to you.
I want to get your take on where you want to allocate capital this year. Many of your picks that you brought us last year at this time ended up really performing well, so congrats on that. Give us your sense of the macro story, the things that you're looking at that will provide that backdrop for choosing stocks to own this year.
Yeah, I think this year is going to be pretty choppy, but I think it's going to start off very well because you've got a lot of stimulus to start the year. So you've got the big, beautiful bill, which should give us about 100 to 150 billion more in tax refunds for consumers. For corporations, it helps R&D and CapEx. The Fed, for their part, started quantitative easing light, buying 40 billion a month in short-term treasury bills in December. You're going to get a new Fed chair in May who's going to want to cut by at least another 100 basis points. And so that should really keep the momentum going. Having said that, as you get towards the end of the year, you've got midterm elections coming up, and I think fears around whether the Socialist Democrats gain more seats, they're not viewed as good for big business. And then also whether you get all these AI companies funded, I think that's going to be an overhang. So I see the full year as being choppy, but with a very good start because of easy money.
Now, you still believe that AI trade is going to be in place, but you're choosing some names that are off the beaten path when it comes to artificial intelligence and this data center build out. How does that play out in 26?
Well, as I said earlier, I think it's going to get a lot choppier. And you saw that at the end of last year where people started to question, can a company like OpenAI, for example, that's only going to do 20 billion in annualized run rate revenues exiting last year, how are they going to fund 1.4 trillion in capital commitments over the next 8 years? And that's why you saw names like Oracle and SoftBank and others getting hit, and a lot of these AI trades having issues. So, and I think that's going to be something that continues this year. As I said, I think these companies will get funding at the beginning of the year, but we're going to have this repeat towards the end. And so a name like Cisco, which was one of our top 5 picks entering last year, it was up 30% last year. It's still a pick for this year because you've got a multiple there that's in the high teens versus the S&P, which has a trailing multiple of 26 times. But you've got their revenue growth accelerating because they're selling more into companies that are trying to upgrade their network to take advantage of all this AI. And so you should see revenue growth accelerate there. And then the other one is Apple, where, to some degree, the fact that they've been so behind on AI, when they launch iPhones with AI capabilities plus a foldable phone, you should see revenue growth really accelerate as you go into fiscal 27.
But real quick before you go, next week is earnings season. Are you expecting a good fourth quarter for earnings? Because that certainly will drive sentiment in the coming weeks.
Yeah, I expect a good Q4, but more importantly, I expect a good Q1, because remember, in Q4, we had the government shutdown. So in Q1, not only are you going to have the benefits I talked about earlier from the big, beautiful bill and Fed action, but you should have the economy accelerate because you don't have a government shutdown.
We will leave it there. Dan, always a pleasure. Thanks so much for joining us.